All right, we are looking at Monday, May 12th, 2025. So, some interesting stuff happening in the market. I'm just going to go ahead and review some potential trades that could have been taken. Currently, I am looking at about a week's worth of data here. I've got my sessions up so that I can see what session, what happened where. Big move in a Tokyo session here. London, a bit of consolidation and a drop and a rise back up in the New York session. So for today, I kind of want to focus on what happened in the New York session. I'm going to review some trade opportunities, some options, futures trading, some trades that could have laid in wait if only we had taken them. Right, hindsight is key, and I believe in learning from what we may have not taken a part of. That way, moving forward, we can potentially take those trades or those type of trades and profit from them in the future. So that being said, I'm going to go ahead and bump on down to the 15-minute chart. And currently, I am looking at the NASDAQ. So in Q, we can see when the market opened after a large push in the Asian sessions here, and then London, we had a bit of a fall. Kind of looks like it wanted to reclaim some of that move, but it did not come all the way back down there. But I do see some big pushes down, quite a bit of consolidation, another move back up, plenty of opportunity to be had. So now what I'm going to do is I'm going to jump into my Thinkorswim platform through Charles Schwab, used to be TD Ameritrade, and I'm going to focus on options first. If I had traded options today, what could I have traded? So another thing we're going to jump into here is I'm going to go to ES, and we're going to look charts very similar, right? In QES tend to be very similar in their moves, not always identical, but I'm going to focus on EA, the S&P 500 here today. So let's go ahead and hop over to Thinkorswim. Okay. So as you can see, I've got my charts pulled up here. Currently, I'm looking at ES and SPY. So we're going to look at some SPY options, giving the trading that happened today. You can see there's quite a bit of movement. We're going to bump this up to the 15-minute chart here. Oh, excuse my moves. There we go. So we've got our 15-minute chart here, and we're going to kind of review what opportunities may have, been waiting for us to take advantage of. So I'm going to be focusing on the ES chart to start with, just because I get the full picture, and I'm probably going to keep SPY here at like a 15-minute chart, just for easily reference to easily reference the moves versus the multi-candle spread here on the 1-minute chart. So first things first, huge push down when the market opened. So if you're one of those New York session open traders, this could have been a great opportunity for you. It looks like the market opened, pushed up, and then failed. So if you had decided to jump into some SPY contracts right here, I imagine you might have paid a premium, but let's see how that would have played out. So we're going to hop over here to this. Well, before we do, let's take another look, right? So if you would have gotten in somewhere in this chart, just say somewhere in this area, right? Somewhere. Doesn't matter where. There's no right answer here. We're just looking at some options. So this is around the, what do we got here? Probably the 581. Yeah, let's say about 581 to, yeah, let's just say 581. So if you had decided to go in the money or right at the money, you'd have been at 581, 582. Now, I'm going to just strictly look at in the money just to see what it would have been like. So now I have my options chart down here. And what this is going to be producing for me is information about today's trades on the options chart. So let me just change this really quick, make sure I've got this pulled up correctly. All right. Yep. Okay. Just a little bit of chart silliness there. So we'll go back to the 1 minute. And let's go to the open of the day. Come on. There we go. Almost there. All right. Here we go. So when the day started, we can see some movement here because there was a big push down. I apologize, these charts can be a little hard to finagle. I'll get better with this in time. This is my first video on the channel, so thank you for your patience. So right here, this is the opening price of the contract. We are currently looking at the 581 puts contract. We were expecting the market to go down, and it did, as you can see on SPY right here. So in the first 2 minutes of the day, you can see that the price started at around $2. So $200 contract in the money, or right at the money. That price dropped down to roughly around $1.84. So roughly about $15 in loss on that $200 contract if you had gotten in the moment the market opened, right? But you probably wouldn't have. You probably would have gotten in somewhere around here, I'm assuming, maybe even up here. But either way, if you had gotten in at the money somewhere in here, you're looking at about a $2.30 move to $3. So we're talking about a 70-cent move overall. And let me move this back over here to the 1 minute as well, because I would like the timelines to line up for you. I want you to see how this works. There we go. And here we go. So right here, whoops, I went to the wrong spot. And here we go. Yep. So here's the 1 minute move. You can see big push down, right? And then some really choppy downward action. This is not clean, but either way, if you had gotten in here somewhere around $2.30, maybe on this candle, maybe you saw the first one print and you're like, hey, we're going to go reclaim all of that Asian move up. If you would have gotten in roughly at this point, you would have gotten in somewhere about $2.45. And if you would have held to the lows, give or take the lows as you may want to call them, we can also look over left. See, that might have been a good reason to hold at this point. Right over in here, you would have gotten about $3.60. So we are talking roughly about $1.20 in move. That's $120 per contract on move. So, you know, if you had done that math beforehand with 5 contracts, right? You know, you're talking about 500 and what is that? $600 in a move, as well as the fact, I just want to pull this up really quick. So what do we got? 120 divided by, what do we got somewhere down in here? 360 times 100. So that was about a 30% move on these contracts, roughly about a 30% move. That's pretty awesome. Most people would be happy to get a 10% move, and that's a 30% move right there if you just would have got in, held. I mean, there were plenty of opportunities here to hold, and you could have got out at multiple times at that price. It all just comes down to your risk tolerance. So for me, that was a beautiful move that I did not take, but could have been taking. That's the whole point of this channel. We're looking at trades we could have taken. I'm not here to tell you what trades you should take. I'm here to show you what you would have made if you would have taken a trade. Now, that being said, after this, I am personally not a big fan of this price action. I don't know about you, but I don't know that I even would have traded this if I wanted to. Now, one thing I will say is we had a humongous push down. We've got a large bit of imbalance, and then we pushed right up into that imbalance and rejected. This might have been a good place to trade. So if you decided to get in here even, we've got a price point of $2.60, and it peaked out at around $3.30. That is going to be roughly a, what is that, a 60 cent move on your prices. That's a $60 profit per contract just for that. I mean, if you would have gotten in right after this candle, you easily would have net somewhere around $60 per contract. And this is on the one contract in the money, right? Now, that being said, I like this trade much more. Who doesn't? Hindsight trades are beautiful. But let's take a look at why this trade might have worked. If we look, big wick, a lot of sellers. We came down, buyers were still here, and up here, we broke this wick. We pushed, but we failed. We closed below this wick again. That might be, to some, a good indication to sell. And if you had taken advantage of that right here, you'd have been at about $2 per contract. Maybe let's just round it up to $2.25. $2.25, and if you would have held all the way down, whether you would have or not, you know, it's completely up to your risk tolerance. You're talking about $4.40. So we are talking $2.20 to $4.40, right? That move was humongous. What are we talking about there? $4.40, $2.20. You know, that's literally, what is that, 100% move, I think? Let's see here. So you would have made $220 per contract. Yeah, Yeah, that's a 50% move, not a 100% move. A 50% move on that. Either way, pretty awesome. And I apologize if my math is wrong. Math is not my strong suit. I pull up a calculator. I'm more interested in the actual return value, and I would normally cheat and just look at my portfolio at the end of the day, and it gives me my percentages. But I still want to break this down and just kind of show my process when I'm looking at previous trades. Now, you might be asking, hey, why do you look at previous trades? Well, I see it as an opportunity to learn. Something happened here. And there are usually a few indicators as to what. There are thousands of trading strategies, and I've been through a lot of them. Heck, I'd probably even say most of them. But if there's anything I've learned, that there are a couple things about trading. There's a reason to get in. That is part of your strategy. That is a part of your plan. But then there's also a piece that a lot of people don't consider, and that's intuition. Intuition is a big part of trading, and the market will go one or of two ways. It'll go up or it'll go down. It can go sideways, but it's still going up and down, right? It's a zipper, but up or down. And if you are intuitive enough and you have a good plan, you can take advantage of these characteristics that the market will show. This is a prime example of that. Now, that being said, if we look, one thing we can point out is a reverse option, and that is to counter trend trade. Now, I don't know if you would call this counter trend trading. I know people that would argue right now that that is not a counter trend trade because on the 1 hour, we are nothing but bullish. But then I know people who would literally sit here and say, well, it's a counter trend trade because the market is opening and it is just falling. So you're going against the current trend, right? Potato, potato, your choice. But either way, I personally believe in counter trend trading. I believe in trading price action. I don't care if I'm following the trend or not. I like to follow the trend because the trades are easier, but to each your own. That being said, this would be a potential another good opportunity for some calls. If we look here, we have a hard push down, but then we have these large buying wicks, right? Now, I wouldn't personally take this trade, big, huge move down after another big, huge move down. It almost looks like it wants to recover back down into that large push up. But one thing I am going to look at are these candles here, right? These buying candles. And these candles, push up, and then we start getting that bearish reaction again. But then I notice this candle right here really sells me on the idea of calls. Now, you might ask why. I'm not going to go into great detail, but let's just say big push down, couple green candles pushed up for a retracement, another push down, failed to make a new low, and then this candle happens. Push up, we break a high, right? This is a little high. We break this high, but we remain green. The candle does not turn red. This is a green candle. The next candle's barely red. We created some support here. I probably might have considered taking a trade here. And no, I did not take this trade. So right here, let's take a look at that. We're sitting at about 577. So I'm going to round that to 578. We're going to go one out of the money at this time. 578. Here we are. Let's see what that trade would have gotten us. So right here, let's boom this up. Raise this up here. And, oh, I did puts. I'm not paying attention. I apologize. 578. All right. We're going to go over here. And now let's take a look. So, at this point, we are right here. So, lift this back up to get more of a view. And boom. There we go. So right here, assuming that you had gotten in somewhere at this point, maybe you got in on the support level and you're like, hey, my stop will be down here, whatever the case is. You decided to buy some calls here, and maybe your target is this most recent lower high, or maybe you're aiming for this up here. I don't know. The choice is yours. Whatever. You make your decisions. But if you would have gotten in here somewhere, you're looking at about $1.60 per contract, $160 per contract at maximum risk if you let it go to zero, but who does that? So $160 per contract. And you could have walked away with somewhere around 260 to 280 to 90. So you could have walked away with 100 to 120 to $30 just off of this trade alone. This one trade right here, what do we got? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. So about a 15 minutes worth of holding. A little extreme for some, right? But some people hold for days. That being said, there was a great buying opportunity. I look at this chart, and if I zoom out to the end of the day, I think we became bullish at the end of the day, and we kind of finished with a higher high, with a high. Yeah, so as you can see, we opened here, we closed here. There's a very small portion of positive on the close, so we actually closed very close to where we opened. That is what I call a sideways day. There is movement though. There's opportunity in every single day. The key is you want to trade what lines up to you. Now, based on this, I think it's important that you trade your plan, but you should also learn from what you trade, and I think that is extremely important, and that's the whole point of this channel. This first video might be a little off, as I'm trying to break the structure on how I want to do this. But that being said, I mostly want to talk about options trading. I'm going to look at SPY. And I'm open to requests. So if there's something you would like to see, I could show QQQ options. And for those that like to live dangerous, I could show SPX options as far as what you could have made in that day. Now, me personally, I don't tend to trade past 12 p.m. Eastern, but I know some people do. So the market for me opens at 7:30 a.m. I am Mountain Time. So for me, I probably would have stopped trading around this time. I wouldn't have even considered either one of these trades in most cases. I probably would have traded some of this, and I might have traded this right here. But that being said, you trade what you trade, right? So now, before we hop off, I do want to hop back over to those that trade futures. And I want to talk about that. So we're going to go to the 1 minute candlestick chart here, and we are going to look at the session open. And we're going to talk about trades here, right? So we've got the 1 minute chart, and we can see that on ES, this pushed down pretty heavily. Your first candle didn't stop till here. Now, if you're aggressive, maybe you would have purchased in there. I personally don't know where you would have put your stop loss on that. Way up here is pretty crazy. Maybe you put it above this little low here. What would you have been aiming for, right? Maybe you were aiming for down here. I don't know. But just as an example, if you had taken this trade on futures, one contract would have net you about $1,200. That is a fantastic move. If your stop was maybe above this high right here, then you can see that you would have been risking $200 to make $1,200. That is a 1 to 6, right? 1.75. So it's about a 1 to 1. 1.75. I can't do my RR. It's a 5.6. There we go. It's a 5.6 R to R. So really good in my opinion. That might have been worth taking. That being said, maybe you didn't take that one. Maybe you took this other one I was talking about right here. All right, let's zoom in a little bit. Maybe you took this trade. So maybe once the candle closed, you hopped in here. We're just going to pop this on here. We're going to do this. And maybe you were aiming for this low. Now, we didn't actually get there. You would have gotten stopped out. But I don't know about you, but I don't always tend to hold all the way to my targets depending on how price is reacting. But if you had taken this trade, well, there you go. You can see that you still could have made somewhere in the realm of $500, give or take. Now, in this case, though, the risk would have been really high. That, we're talking about a, 1 to 2. I'm not a fan of 1 to 2s. I like 1 to 3s or more, just personal preference. Also, that being said, let's also take a look here because we talked about this before. So this came up, this failed here. If you had decided to take one ES contract on this failed rejection of this wick, maybe you tighten your stop loss just above this wick right here. Whoops, let me close that, sorry. So maybe you put your stop loss just above this wick and you're aiming for down here, right? I don't know why you would aim down here. If you look down here, right, there's a big push below this. There's not a lot of targets here, but hey, to each their own. Either way, if we do this, you can see that this trade risking about $150 would have net you about $900 aiming for the low of day so far. If you decided to hold because she kept going, you could have made somewhere around $1,500 to $1,600, which is pretty fantastic. At this point, we are beyond the time I would normally trade, so I'm not going to dive into the rest of this. But tell me what you think. If you're a fan of what I'm doing here, or if you have questions, or if you just want to see more or even more things being traded. I personally am a fan of NQ, ES, and gold on futures. And when it comes to options, it's pretty much going to be SPY, NQ, and SPX. That being said, I appreciate your time. Y'all have a fabulous day wherever you are in the world, and we'll see you tomorrow.